And we're back. Welcome again to the Lobster Talks show by Lobster Capital. Today I'm with Laurie and we're going behind the scenes of the latest YC batch, Summer 24, that just ended a few days ago only. I was at the event and have a lot of things to share. So, Laurie, thank you for being here. Welcome to the show.
Good to be here. So you just got back from San Francisco, and so you've witnessed the YC Summer 24 batch and their demo day. So what are your kind of initial impressions of that batch? How does it compare to previous batches, like in terms of quality, innovation, and obviously investment potential?
Who genuinely think that YC is getting better and better. And that's thanks to all the efforts. So all of those people working there and trying to make it better and better. Of course, I do have to mention Gary Tan, who's head of YC now for a year and a half. He came back in January 2023. He's done a lot of things to change YC and hopefully make it better. He brought in 2 new group partners that are amazing, and probably we're going to talk about them a little more. He just went back to in-person demo day, and he changed to 4 batches. So there's a lot of things happening. The quality of the startups in YC are extremely strong. I think they have been very strong for the last year and a half. There's obviously a lot of AI, and I'm sure we're going to get to talk about this as well, but there's a lot of ex-employees from very big businesses, ex-FANG, ex-Tesla, who brought what they learned to their newer startup. There's in this batch a company that got $1 billion in LOI. There's a company started by an ex-YC group partner. So overall, very strong batch. And there's a lot of everything because there's more than 200 companies, maybe almost 250, I think 240 or something. So obviously not every company has great revenue and traction, but all of them are building and doing something interesting. And almost all of them have some revenue, even though if it's small. So yeah, overall, great batch, very exciting times. And I've made a few exciting investments as well. By the way, it's the right time for me to say that the batch is one thing, but I'm going to follow and invest in those companies for the next 3-5 years. So it's only the beginning, but very promising.
Yeah. So the batch kind of shows a early look, and so there's a lot of even later stage VCs who are looking at the batch because they want to then track how those companies progress over kind of the next few years. And so that's kind of where you have a lot of thoughts around why the group partners are so important, because they play a role in that time during the accelerator, but then also throughout the period after that in raising and general advice as well. And it's like obviously really exciting at the moment in YC to have obviously Gary back in as a group partner, but then other impressive people like David and Tom Blomfield on that. Touch on what you're seeing from the group partners. Is there excitement for those group partners to come back into YC? Is like the AI the big driver of why people want to kind of come back in and start helping people build?
Yeah, absolutely. I mean, first of all, having Gary himself as a group partner, that's pretty impressive. That also shows the kind of leader that he is. He's not just sitting on his throne and be like, oh, you should do this, you should that. He's actually doing it himself. And so very impressive. Congrats, Gary, on being a group partner yourself. And those companies that he chose to work with were very impressive in the batch. Very strong companies, a lot of companies with a lot of revenue that were really working with Gary. Of course, Tom Blomfield, co-founder of 2 unicorns, Monzo and Go Cardless, and David Lieb, founder of Google Photos, product used by 1 billion users. Both of them new now as full-time group partners at YC. I actually got the chance to meet both of them last week, and we knew each other from the internet, but of course, meeting face-to-face is much better. And so, yeah, people are very excited with those 2 group partners. I've actually heard a lot of great things about them specifically. Not that the others aren't good, but people take them for granted, which that's the way life is. But for those 2 new groupers, people told me, oh my God, we love Tom. Oh my God, we love working with David. So really heard great things. And I believe the level, them being group partners, they what they bring to the table is pretty huge. There's not that many people who build 2 unicorns and are not building a 3rd one, but actually want to be group partner at YC, which is in of itself a great accomplishment, I believe. So amazing to see such talented people at YC. That's also what's going to drive performance, and what's going to drive the best companies is if you get advice from some very legitimate, strong people who've done it before you. Of course, you have all the alumni. There's Brian Chesky, who came back during the batch to give a talk. That's what started the whole founder mode thing. But you get them maybe once or twice during the batch, but the group partner, you're going to talk to them almost daily. And all of those group partners that I met, I asked them the question that I usually ask is, how can I help you? How can I help your companies? How can I help YC? And their answer was always the same. Just keep funding great companies, keep doing what you do. So I remember this thing that Gary said at the event last Thursday. He said, we want everybody to rise at the same time. We don't want some funds or some people or just YC to rise and some others are left behind. If we do that, we have done a bad job. But we want everybody to invest into the ecosystem, everybody to gain from it, both in terms of money, obviously, that's what investing is all about, but also in terms of this journey and the people you meet and what you learn. So we just want to rise the tide and rise everyone's boat at the same time. And that's a beautiful way of seeing it. And those people, that's just what they're doing. They're just trying to create as much value as they can for themselves, for the companies that they work with, and incidentally for us and for my investors.
Yeah, cool. So obviously with group partners coming back in, seeing a lot of ex-FANG employees starting startups coming into YC obviously doing a lot of vetting on the front end. It might seem like when you watch the batch that everyone is an investable opportunity. But how do you specifically look at those startups before the batch, during the batch, and then on demo day? Like, what's your process there for engaging and evaluating?
I agree. You're right. Potentially all of them could be a nice investment opportunity. So, I mean, the very first filter for me is I have some domains that I don't invest into. For example, medtech and biotech. If it's software for medtech or biotech, I can invest because I can understand software. But if it's an actual medical device or product or molecule or something, that's not for me. And so YC has one group partner specializing in this Serbi. And so all of those companies are pretty much out of my scope. I actually look at them just out of curiosity, and I want to, learn about what they're doing, but it's not really my thing. But that excludes maybe 10, 15%. For the rest, you're probably right. Something that I personally with Lobster really optimize for, and I've talked about it on this show before, is early traction. And so I'm really looking at companies who've demonstrated very strong early growth in terms of revenue, in terms of dollars, not in terms of users or whatever. And why did I choose to focus on that? Well, startups are all about execution and execution risk. And if you do have traction, so if you do have revenue and it's growing quickly, it means you have executed one way or another. There's no way to cheat your way to making money. You have to have built something and you have to have sold something. So it has to be make something people want. That's YC's motto. So you have to make, and it has to be something people want. Otherwise, they don't buy it. And also, if it's growing exponentially, it means you've figured out a way of actually selling it, a go-to-market strategy, what you could maybe call product market fit. And so I over-index on those, and actually YC has a lot of very early startups that haven't reached that level of revenue. So you have a lot of companies doing between 1 and 10K of monthly recurring revenue, MR, and that's usually too early for me. I do say usually because I'm happy to sometimes make exceptions, but and this ties back to another thing that you hear about a lot on YC is that, YC valuations are too high. And it's not necessarily true, but I believe it could be true sometimes if you have 1K $1,000 in revenue, but you're pricing around at 20 million post-money valuation. That's the usual cap that companies of YC were going for at this latest batch. Yes, it is quite expensive. There's reasons to potentially do it regardless, but if we're very factual about it, it is expensive to price you around at 20 million if you're doing 1,000 of revenue. So that's also for me, having those companies who have a higher revenue, then the valuation is easier to swallow. So I'll give you a very specific example of a company that I just invested in from this batch. I invested in at $30 million of valuation. So it's more expensive, but they're doing 2 million in annual recurring revenue, which you call ARR. So 30 million valuation for 2 million in revenue with a 30% monthly growth, month-over-month growth. It's actually 15 times revenue, 2 days revenue, and growing very quickly. It's actually a very good price compared to 20 million and almost no revenue. So just to mention this, that this ties into the YC valuation discussion. Again, I believe that even at 20 million valuation, it could be potentially a great investment. But that's why I'm actually looking for those investments that are even better. And just to conclude, it's not only about price, by the way, right? I'm talking about the price right now because it is important, but it's really not only about price. Price is one part of the equation. There's a lot of other things, but so to answer the original question, I do favor those companies with great early traction. That's one of the ways that I filter. It's probably one of the most important way that I filter between all of those companies.
Yeah, cool. Be good to just super quickly touch on some of those things that are outside of revenue. As we talked about before, there's a lot of ex-FANG founders coming back. There's people who've done some super impressive stuff in the past. What are those maybe factors that don't come through on paper, that don't even necessarily come through on the demo day, that you're thinking about when you're evaluating someone coming through YC?
Yeah, absolutely. I love talking about that. That's my job, what I do on a daily basis. So the first and foremost, you have to have a great team. So that's pretty common to say. The good news is YC does a lot of the heavy work for me because they only accept great people and great team. That's one of the main reason why you're accepted or not at YC is who's your team, what's your background, etc. So being an ex-FANG or big company isn't for me necessarily a good thing. It's probably a little plus, but it's also important that it hasn't been too long. I think if you've worked 10, 20, 30 years, you can have worked 30 years at many of those companies that exist at the time. But if you've worked too long in a big company, I think it starts to get you the wrong reflexes. It starts to shape you maybe one way that's not necessarily the best way for startup life. And what I mean by that is when you're in a big company, a big group, if you need marketing, you don't do it yourself. You ask the marketing department. If you need to hire someone, you don't hire yourself. You ask the hiring or HR department. And if you want to build something, you ask the IT department. So you become more and more dependent on others, and less you learn to do things yourself. And when you're an entrepreneur, everything falls and relies on you. So you have to do everything. You have to be the center. So if it's been too long, you're too comfy and used to, some other people will do this for me. And even going back as an entrepreneur, that you have to do it, but you don't really remember how, or you don't have the reflex of being that proactive. So I don't want them to be too into their old ways, but a few years could help, but it's not necessarily what I look for. It's just something on top. What I do look for is, team, early traction. We've established that. I want a scalable business model. So I want a company that's going to be able to make more and more profit without their costs increasing. And that also applies online on the internet. For example, now you have a lot of AI companies that have a lot of cost for running their models. If 90% of the money that you make goes to OpenAI, and that's going to be whether you make 1 million or 10 million, that's actually a big problem for me, even though price of compute of AI should go down in the coming years, but still there's a problem there. So scalable business model. I want them to have figured out a go-to-market strategy. So that's why, again, traction sort of answers this for me. But, building a startup is about building something, making something, and then selling it. And many companies at YC, they do what you should do is you do cold outbound outreach, talking to the YC community, which is quite big, and you find a few customers that way, and that's great, but that's not scalable. So I usually ask them, how do you get from the 10 customers you have today to 1,000 customers next year? And if their answer is, I don't really know, that's not something that I'm looking to invest in at the moment. I need them to have really thought about it and give me a satisfactory answer. So maybe it is, we have a lot of inbound because of our online presence, because we do podcasts, because we do, social media, because whatever. Or we have GitHub stars. And so people come from the open source community to us. Or we've had some ads. If ads could be a very simple solution, as long as the CAC to LTV ratio is correct. If you're just spending yourself out of business, it doesn't work. But if you're not, that could be one way. Or we have a virality factor, K factor, or referral program, or affiliate marketing, whatever. It needs to, these could be a number of different answers, but they need to have figured a system out. And what I tell the founders that I work with, I just told this to a bunch of people at the event, I want you to have a way to get a new customer while you're sleeping. And of course, the idea is not that they go on vacation and do nothing. The idea is while you get some new customers, you can spend your time working on something else, building the next thing, building the next customer acquisition engine or the next thing in your tech, etc. So that's super important. That's, by the way, comes from all of my years building businesses as an entrepreneur myself. It's easy to actually create something, especially for all of those YC founders who are almost all technical, or at least one of them. But building something is not enough. It's a great start. Mind you, I'm not saying it's not worth anything. It is. But if you're not able to sell it, then you do have a problem. Again, make something people want. There's people want. That's what I'm looking for. And then to conclude, I wrote 2 books about this in French, 3rd book in English coming soon-ish. But so I could talk about this forever, but try to be as concise as I can. The last thing I want to add is I'm looking for bull and repeatable is go-to-market that I talked about, and defensible business model. So I ask them what's their unfair advantage, something that competitors cannot replicate because every startup will be copied. It could be by Zuckerberg. He loves doing that. Or Bezos or someone else. Could be a problem for them. What's your unfair advantage? Something that makes you really defensible and makes it difficult for competitors to come and eat your lunch. So that's a short summary of what I look for.
Yeah, cool. So then on that, with this kind of adage of something people want, obviously the proof of that is in things like revenue and traction, of course. But so like historically, YC, some of their biggest successes have come from ideas that were like super contrarian at the time, or it wasn't obvious that they were going to be successful. Did you see any of that kind of in this batch, or are you looking at any areas that you think might be overlooked by other investors at the moment? So just around that, what's happening at the moment that you think is contrarian, or maybe something that you're seeing that other people don't agree with or haven't seen?
Yeah, there's some very crazy stuff into the current batch. So there's a company building a refueling. Let me preface this by saying this is not necessarily contrarian, but it's certainly crazy. So a company of 2 people, very young, like under 30, who are building a refueling station for space. Not contrarian, everybody knows we need this, but crazy that's 2 25-something-year-old are building this. There's a guy who or there's a team, I should say, who's putting GPUs underwater to just use the natural cooling from the water and save money there. There's a guy who's building Uber for trucks. And so instead of actually asking for a truck to come to your door tomorrow, you're actually going to take your phone and there's a truck that's already on its way somewhere that's going to detour and come to you right away. That's crazy. There's a lot of insane stuff going on at the batch. Those are just a few top of my head, but there's a lot of different things. There's a lot of things for drones now, and we saw there's a weapon company in YC. It's actually not the first, but it was reported as the first, and people went crazy. Again, this is not necessarily unconventional, but very interesting. Now, on the contrarian side, yes, there's one thing that I'm being very interested in is those companies that are not using AI, because everybody is into AI right now. And I'm not against AI. I've made a few AI investments myself, but I'm really looking closely at those companies who are not an AI company, and they might really be overlooked. Just talking to a guy at a dinner in San Francisco last week, and he said, "Oh, I raised my fund and I doubled the size, and it went so crazy, and I've got so much inbound." And I'm like, "Oh, that's pretty cool. Congrats." It's not that easy raising a fund those days, even though Lobster Capital is oversubscribed. I want to mention this publicly. And I said, "Oh, what's your fund about?" And he said, "Oh, it's an AI fund." And I was like, "Oh, I should have known." That's why everybody's just dumping money there. But for example, there's a lot of YC companies in the open source space. And it's been the case for a while now. It's been several batches that I see more and more of the open source movement, and it's not necessarily AI related at all. So that's very overlooked. I'm looking at it very closely. And again, not to take anything away from AI. I think AI is super interesting, but yeah, it's not everything. And I'm guessing some of them might be overlooked. I saw a lot of companies addressing the real estate market with AI or without. But again, real estate might be quite overlooked at the moment. So those are the types of things that I can mention here.
Yeah. And so you touched there on how AI is obviously dominating conversation, AI is now this assumed factor within business models, or especially tech business models, much like having an app or using cloud would be. So just with that adage of make something people want, what again are you looking at around the real world application of the potential of people applying AI to problems, particular problem solving approaches might you be looking for? So you talked earlier about the go-to-market, but maybe even earlier than that is around the specific problem that people are solving. Like, what are the problem solving approaches that you're looking for?
Yeah, that I think you already answered the question yourself. It's about solving real life problems. Remember the NFT, crypto, Web3 bubble, and everyone was asking, rightfully so, what's the use case? Why do you use those monkeys Bored Ape for? And actually, for the Bored Ape specifically, not that I own one, but there was a use case is you're part of a community. But are you really willing to pay $250,000 just to be part of a community? But that's it. That's the only one that actually had a usage. Everything else was pretty much doing nothing. And so I'm looking for AI where it actually solves a real problem in the real world today. I'll give you an example. There's a YC company that takes body cam footage of policemen. Most of policemen have a small camera now that they wear just in case of they need proof to document everything that's happening. And they take the body cam footage and they actually draft the report automatically so that the policemen don't need to spend the time in front of the computer typing the paperwork, which takes them up to 50% of their time. So allows them to spend more time on the field than in front of the computer, where their value add is almost zero. It just takes the footage and drafts the report. That's real use case in the real life today. That's something that everybody needs. And there's so many police officers with cameras just in the US and in the world. That's a very straightforward use case of AI. So that's a perfect example of what I'm looking for. Not that I invested in this company specifically, but there's a lot of AI tooling being built. So we help you fine tune or switch between open source and closed source models and stuff like that. This I'm being a little bit more careful about because it's solving a problem today, but the AI world is changing so quickly that you don't know actually if a tool for fine tuning will be relevant 2 years from now. It's very possible that it will. From what we see today, it looks like probably it will still be needed, but 2 years ago, it didn't exist at all. And so we don't really know what's going to happen 2 years from now. I'm being a little bit more cautious about those, but companies solving, and by the way, like there's always the point of, is OpenAI going to come and eat your lunch? And in some cases, it's possible. So for the camera footage typing reports, I didn't spend any time thinking about it before, but now if I think about it live with you, it is possible that OpenAI at some point releases something saying, give us the video and we'll make the summary for you. And so you could have a GPT that is called, so a sub chat that says, hey, here's my police footage, please type in the summary. So this could probably be an example of a company could be, I don't know, going to zero, let's say, if with the latest OpenAI release, because it's generic. But, if you go to some specific use cases, so I invested in a company in this batch, I can, sort of give a teaser, that replaces the video editor. If you have video that you shot and you want it to be edited, so you want to put all the things together, add a sound, add maybe a voiceover, blah, blah, blah. There's a human doing that. They replace this for you. They're not the first one, but they're growing extremely quickly and aggressively. And for sure, that OpenAI is not going to go into the video editing world. Even though it's a huge market, it's not big enough for them. They're more a generalist conversational tool. And so this is much more defensible than just upload a video and get a summary text in return. So, that's just one specific example of what I look for, something that solves a real problem, but also that OpenAI cannot really disrupt in a single update.
Yeah, I really like that. The YC company doing the body cam example. It's really cool that they're kind of starting with that traditional problem and then going and thinking about it with these kind of more modern approaches. And there definitely feels like there's a bit of a split in the YC batch at the moment around things focused on tools for AI or tools for developers using AI. And then the other side of it, there has been quite a lot of using AI or similar tools to kind of transform those traditional jobs. And even with like your own Lobster portfolio, things like Point One with, billing, or Solo Suite with debt collection, these are starting with those like traditional industries or traditional problems and then kind of giving them that disruptive approach. Just there in terms of like on that, are there any, outside of the going against the grain, like there's obviously Silicon Valley has a lot of FANG companies and those founders coming from that birth kind of viewing the world in the same way. Was there anyone in your time in San Francisco that kind of even comes from different stock and like is thinking about things differently and where that might lead them to build a successful company?
Yeah, I think we should talk about Point One that you just mentioned. So it's not an S24 batch, it's a winter 24 batch, but he's, I met him in San Francisco as well. And that's a precise example of a guy who was just a lawyer. And he sees AI coming, ChatGPT, end of 2022, etc. And he starts, playing with it, asking questions and see the answers of ChatGPT. Obviously, lawyers spend a lot of time looking at old cases, comparing results of different trials, and there's a lot of documents. It's almost all in paper. And so this is a place where AI just excels. And so he thinks to himself, I'm a lawyer, I don't know how to code, but this AI thing is going to disrupt everything, and I need to go build in AI. And so he actually, that's the kind of story that I obviously love. He didn't go out with an idea. He didn't fall in love with his own idea of like, oh, this is what I'm going to build. He went out, founded 2 technical co-founders, and went out to talk to other lawyers and ask them, what do you need? What's a problem for you? What's the rock in your shoe? What's bugging you? What's taking you time? And so everyone said billing is a nightmare because every time I take a phone call, I got to open my app and start the billing timer so that I know which customer it is and how to bill them. And so he thought to himself, or they thought to themselves, the team, this is a great use of AI. And so Point One is a software that you put on your phone and computer. Once you turn it on in the morning, or you don't even, it's on by default, and everything you do will be automatically categorized and billed to the right customer. And, they just after we invested, they just got an investment from Bessemer Venture Partner, who's, for those who don't know, a very prominent fund in the Valley. So that's, a very simple, specific case of someone who's not in love with the AI itself, comes from an actual world of law, sees the AI, goes out and figures out what's a problem that he can solve, what people do want, and actually builds an AI product on top. That fits what you were referring to, I believe.
Yeah, and there's even been like an increase in, you mentioned the defense tech side of things, and even some of like the more deep tech side of things with the company doing GPUs underwater. So it feels like more of those companies are kind of trending back in with what YC's doing. Is this just like a narrative that's being presented, or has YC been looking at these kind of deeper tech situations for so long? And then how are you maybe looking at some of those maybe startups that won't get to revenue as quickly because the product development cycle is much longer, but actually potentially have a lot more disruptive potential?
Yeah, absolutely. Actually, YC has been looking at deep tech for a long time. People just don't know that about YC, but they have. They always did. And they funded a company called Boom, who's bringing back supersonic planes. And let me just pull up the year, but I think they funded them like 2017 or 18 or something. So quite a while ago. And it's, supersonic planes, that the first one that's going to be back in flight since the Concorde. And Concorde was more than 20 years ago now, I believe, or around 20 years ago that it stopped flying. And Boom has been doing, so yeah, 2016, I have it, but 2016, Boom Supersonic. And they've been just killing it. They actually have a plane, it's actually flying. And I think it's American Airlines. Yeah, that's what it is. American Airlines placed an order for 20 supersonic jets from Boom, where I think at the peak, the Concorde had 5 or 8 or something planes in the air at the same time, actually flying. But American Airlines ordered 20 of them. So that's the most deep tech that you can think of, because the tech for supersonic planes, commercial, doesn't really exist. You have to start from scratch. And obviously, there's a big thing on safety, because the first Concorde, remember, blew up. That's why they stopped it. It's actually a French and British cooperation. So it's, you and I here from those countries. But anyway, so they always have been funding deep tech. It's just probably was less advertised before than it is now, because now it's probably cooler. But yeah, there's a lot of drone companies in the current YC batch. There's one that I really liked that's building something that I believe you can retrofit on an existing drone, but that allows you to basically makes your drone impossible to jam, or it's going to be jammed, but you still can control your drone with this technology that they're building. It's jam resistant. And I think it's retrofitted on some other drones, I believe, on some existing drones. So, very specific, immediate use case in Ukraine, for example, maybe in the Middle East as well, either now or soon, which is, I'm sad to say, but the situation is really unfolding as we tape and as we speak. So, YC always has, and it's not the majority, but it's always been a sub part, and it's always been interesting. And so you ask me, how do I look at those companies and how do I evaluate those companies? Because you're right, they might go to, take a longer time to develop, but actually have a big outcome. Well, what's really cool with YC is they force you, or they push you to actually trying to find some early elements of traction right away. Even though it might take actually years to build, they force you, what can you execute in 3 months? What can you do? What can you show at demo day to investors to show them that you're serious, that it actually works, etc. So that's why this company that's doing the refueling in space got $1 billion of LOI during the batch, but they also on top got, I think it's 82 or 85 or 80 something $million of binding contracts during the batch on top of the $1 billion in LOI. And so they haven't really started, building much. They have started building a little bit, but they push you to show, revenue, and to, not only traction and LOI and contract revenue, but also with your product itself. So they hadn't launched anything in space in 3 months. That's unreasonable, but they had actually built some of the tech that they're going to need in space in the 3 months. So YC really pushes it to go super quick. And so, yeah, that's the kind of thing that I honestly haven't done much of in the past, but it is something that I want to do more of. It is something that I've already started to do more of. So in Lobster Capital, I've invested in a company called Array Labs that's doing 3D images from space. And again, they're a YC company. They just recently launched into space, but even before they launched into space, they were already building stuff. They actually already had revenue before even launching, which is kind of insane if you think about it, for a space company that's launching satellites and selling the images to actually have revenue without they launched, and a good amount, like several millions. So that's why I invested, obviously, very exciting company. And so, yeah, I've done a little bit. Historically, in the last 10 years, I haven't done much, but in the last year, I've been looking at it more and more. I think there's great value in doing hard things, and I want to do more, and I'm going to do more.
Yeah, great. And so on the topic of doing more, obviously talked about this right at the beginning with why it's now downsizing cohorts size from around 200 to 100, and instead of running 2 a year, they're going to run 4 a year. So what does that change for Lobster? How do you see more batches affecting the maybe focus on trends that are happening, going up and down through the startup scene? How does it affect basically how you're going to evaluate companies? There'll be more companies coming through, more demo days. Yeah, just hear your thoughts around that.
Yeah, I mean, it's all been quite seasonal, with a lot of meetings and investments happening twice a year and less happening the rest of the year. For me specifically, because I focus on YC, I do have meetings with YC founders all around the year, but still it's been more, condensed in those 2 times. So it's going to be more spread out. So that's great. We have more time for longer meetings, and, seeing less people the same week or the same time, the same month. It was great the way it was. I was really able to manage it, but this is going to be better. You have 4 demo days and more time to evaluate companies. You have less companies at the same time. There always has been a tendency of YC companies to, try to get investors meeting around the end of the batch. And so many people would push the meetings, for example, in September for the summer 24. And so it had a tendency of being everyone at the same time. So that's going to be probably a little bit better in that regard, in that aspect. And also demo day is going to be in person, which is going to be arguably better. So right now the model was, since Gary Tan came back, Zoom demo day plus in-person event at the end, like reception. This is going to be in-person demo day plus event at the end. So I think it's going to be much better. Again, you're going to be able to meet the founders face to face right away. Like, oh, you hear the pitch and boom, you go talk to them and you just, grab them at the exit and be like, hey, I want to learn more, or I want to invest or something. So, that's better, and it's less founders. Of course, 250, it's not 250, it's like 240 is a lot, and it's difficult to, see everything at the same time. So, it's going to be easier to make sense of it all and to have conversations and everything like that. So, no, I'm honestly very excited. I think it's a great thing for Lobster. I believe it's not impossible that once they figure it out, they actually start increasing the numbers again. So, they right now do 4 batches, but halve the quantity. So overall per year, it's the same amount. But it gives them, I believe, the possibility, if they wanted to actually increase each batch's size, to actually double the number of companies. Not sure if they want to go there. It's not an information that I have, but I think it gives them the possibility, at least, which could be interesting, means even more deal flow as the YC brand becomes bigger and bigger. Probably they have more and more entrepreneurs applying, and they could potentially accept more people. So, we'll see how this goes. They're being very cautious about the quality of who they select. I'm also being extremely cautious of having another filter for quality and early traction on top of that. And so, again, remember, in each batch today, I would get the 3 to 5 top in terms of traction. Maybe in the smaller batch, I just get the 1 or 2 top in terms of traction, but that's great. In the S24 batch, I was able to invest in the number 1 company out of 240 with the most revenue during the batch. And so that's the type of investment that I'm looking for. It's going to be less competitive to get to them and to find them with the new, system. And so I'm very excited. And it's 4 in-person demo days in San Francisco, 4 chances to see the founders and the YC team, etc. So I'm super excited about it.
Yeah, good timing too with the close of the Lobster Fund. So then I guess it would be cool to think about, the batches that are coming up in 2025. What innovation or what kind of companies would you actually love to go and fund? Like, what maybe didn't you see this time? What was something that you'd love to see come up?
Well, actually, there's a last batch in 24. There's a fall batch in 24 that's coming up. Yeah. And then
December the 4th, I think.
Exactly. And then 4 batches in 25. Well, I've taken an interest in space technology. I believe, there's a space, and not I believe, it's obvious, everybody knows that there's a space renaissance happening already, since SpaceX has drastically lowered the price to orbit. But actually the new SpaceX rocket, the one that's coming on the market anytime soon now, is again going to divide by a factor of 10, probably actually 20 to 30x the price to orbit. And so it's going to become really cheap and easy to go to orbit. And so there's a space renaissance happening. So I'm looking at this market closely, and I am looking at the AI market. Maybe if there's an intersection there, what can you do with AI in space? There's a company in the current batch that's also sending GPUs in space, and they're going to be able to be computed and work just faster because of the proprieties of orbit and void. So those are obviously the things I'm looking at, but I'm also very curious to look at the non-AI space like I did this time around. I saw a few companies in this batch in the battery space, and actually made one investment in the battery space that I think is a great one. But I think batteries are, quite overlooked in the current startup ecosystem. But batteries are so important for our future. Elon Musk, agrees. He's building batteries as well with Tesla. And, if we want to move to more sustainability, if we want to move to solar and wind, we do need more batteries, because solar is just during the day. So you need the battery to charge and then to discharge during the night. And Batteries are very expensive. They're not that efficient yet. I mean, there's a lot of improvement that could be done on efficiency. It does require a lot of rare earth, materials. And so how do you create a battery without those materials? Maybe that's a lot of people are working on this. And I realized that I learned that batteries are going to represent 4% of global GDP by 2030. 4% of the global GDP is going to be spent on batteries overall, including, cars and smartphones and whatever. So, I'm very interested in batteries. That's one space. And again, maybe the intersection of AI and batteries. That's the company that I just invested in is using AI to help batteries manufacturer just, create batteries faster and cheaper. So that's fascinating to me. And so, yeah, I'm going to keep looking at the AI space and its application in the real world, only and driving revenue and efficiency in the real world. And I'm going to look at the non-AI startups as well that are maybe overlooked by many other funds that just focus on AI. There's a lot of great companies being built. You can build a great company without AI today. It's still possible and it still happens. So I'm going to be looking at this as well. So that's, I'm excited. But also YC always surprises me. There's always those companies that and that's the beauty. They have, 30 applicants per batch. So that was 60,000 applicants per year. I don't know if this number is going to go up with 4 batches. That's very possible. And so they're able to select companies that you didn't even know were, a topic that you're interested in, but that you can look at. So that's what I'm looking forward to. And again, looking forward to being surprised and to actively deploy in the coming years.
Yeah, it's a good place to leave it, focusing on that, not overcomplicating it, focusing on making something that people want. And there's a lot of innovation happening at the moment. And if that's the core thing that YC's directing founders to focus on, they're not going to stray too far from an investable asset.
Exactly. You got it. Awesome. Well, thank you so much, everyone, for tuning in. Thanks, Laurie, for directing all of those questions at me. And don't forget to subscribe on your favorite podcast platform. And until next time on the Lobster Talks. See you soon.